What's going on, everybody? This is Jack with the Trading Tribe. Excited to be back at it today with one of the most requested videos so far on the YouTube channel. So I think this one's going to be super valuable for you guys, especially any traders out there looking at futures or getting interested in futures. We're going to talk about how much money you need to actually trade futures and how, depending on your broker, right, where to actually look to figure this out. So if we see on the screen here, I am going to work in thinkorswim today. That's kind of my broker of choice. I have a bunch of different videos on the channel as to like why that is and everything, but this does depend on your broker. So just a small nuance there. You will have to look into this a little bit, especially if you're on a different broker. And if you're on thinkorswim, we'll kind of talk through today how it works. So thanks for tuning in. If you like and subscribe to the channel, that'll encourage me to make a lot more of these. I think we have a lot of cool content coming in 2023, so I'd really appreciate that. And now we can really get into it. So in thinkorswim, the easiest way to determine how much money you need to trade a given future is actually going to be up here at the top left. So right next to the ticker symbol, we actually have a little drop down menu button. And if we click on that within thinkorswim, there's obviously a lot of different instruments we can trade. So you're going to want to make sure that you've selected futures. And in today's video, we're talking about how much money you need to trade futures specifically. So stocks and options, everything's a little bit different in Forex, but futures specifically is kind of the focal point for today. And this does change by broker and does change over time. So both of those things are something to keep in mind. The numbers we look at today could be a little bit different depending on when you actually go look on your broker. So the way the futures instruments are priced is actually per contract. So you'll notice in a lot of my videos, I'm trading one standard contract or three standard contracts, and per contract, right, there's essentially what they call a margin requirement to day trade. And there's some different language for this. Thinkorswim calls it initial margin, but at the end of the day, it's the same thing, right? So the margin in your account needed to trade a given futures contract is what we're looking for. And in this case, right, we can see natural gas is /NG, and that's the futures contract that we're going to look at today, for example. And here, right, we would need $10,450 for one contract. So if we want to get into the market, whether we're buying or we're shorting, essentially we would need this amount of money in our account to actually facilitate the trade. One important thing here is we actually want a little bit more than this in the account, because obviously if we only have, let's just say, $10,500 and we get into the trade, right, we can only lose a couple ticks before we're under this margin level. And they do what's called a margin call if your account goes under this. So essentially, you need at least this amount in your account to trade one contract of natural gas, regardless of the direction. So super important kind of nuance there. You typically want a good bit above that because obviously you never know what trades will win and what trades will lose. So if you're too tight there, you can have what's called a margin call, where thinkorswim will essentially just sell your position because you do not have enough to cover this initial margin. One thing that is a little bit confusing is this is decided at the broker level. So if I go into, let's just say, Tradeovate, so a different broker in the market, right, they're going to have different margins. So that is something that's a little bit different about the futures world. With stocks, obviously Tesla, for example, right, has the same price across the board no matter what broker you have, right? But that's not always the case, right? There are other brokers that actually do have different costs. So just something to keep in mind there. If we do like look at some of the smaller brokers, we will notice like a little bit of a discrepancy there. That's just something to make note of. Another thing that's really important here is we do have micro contracts, and I'll make another video after this kind of talking about the micro futures world. So we have a couple different options. We actually have a contract called QG, which is like a mini natural gas contract, and it moves the exact same. It just is a little bit smaller in size. And if we look at the cost, right, it's a lot lower. So it's actually 1/4 of the cost. And we'll notice, right, this is a lot more affordable. So the cool thing about futures is you can have a small account, you can have a medium size account, or you can have a large account and trade multiple contracts. But the way you can actually figure out how much money you need to trade futures is actually looking at this little requirement here. And then if we pull over Tradeovate's pricing, for example, you have it on their website, right, where you can just go to the margins on their website. And if we just search for natural gas, in order to day trade natural gas, you need $2,000. So you'll notice Tradeovate's priced a lot lower to actually get into the market versus Thinkorswim. If we want to trade the micro contract that we just looked at, we only need $500. So Tradeovate's actually priced quite a bit better in terms of margin, but that's just preference, right? I like Thinkorswim a lot. I have videos on the channel kind of talking through why, and it at the end of the day is preference there. And then the last thing I wanted to mention about just how much capital you need to trade is this does increment up if you want to trade with more contracts. So if we want to take a position on natural gas and maybe we really like this setup and it's, our A plus setup in our playbook, we can take the trade with multiple contracts, which we've talked about kind of the implications there on the channel. But from a capital standpoint, right, this would actually multiply by the contract count. So let's just say we bought 2 contracts. We would owe the broker, or we would need the broker in the account to have 20,900 in this example. So every contract essentially requires this amount of capital. And then if you want more contracts, you obviously double or triple, or depending on that contract count, can come up with how many contracts you can afford essentially. And then again, this is the margin needed. So you get this money back when you exit the position. This is essentially just a placeholder for actually taking on that risk and taking on that contract. So hopefully this video really helped you guys out there understand how much money you need to trade futures, how much money you need to trade micros, some of the benefits there. And then I'll have another channel video posted later on this week or next week, kind of going over micros in a little bit more detail, because that's a really cool way to kind of lower the cost of entry and actually get in the market with a lot less capital. Thanks, everybody.